Bittersweet week here. It's bonus week and everything, but it's going to be sad to say bye to you guys. And like I said, we have a lot of surprises for you guys in store at the end. So hopefully we won't be saying bye to all you guys, but definitely a sad week for us all. So week 13, guys. This week we're just going to go over final piece of advice, and then we're just going to do lots of fun bonuses. I got awards for you guys, giveaways, prizes, all sorts of stuff. And then you see my sad face there because we're going to also say bye at the end. So today might not go to the 2-hour mark. This is just going to be a quick one. So this week's goals, guys. This didn't get changed. My bad. So this week's goals, guys, we're just going to kind of think about the future of your importing empire. We have Scott Mitchell here, who's an incredible entrepreneur, the best I know. So he's just going to run through and kind of tell you guys, he's the only entrepreneur I know personally that's taken multiple companies public. So this is definitely some good advice for you guys. So definitely take advantage of that Q&A. And then at the end, we're going to, like I said, talk about awards, bonuses. Pretty much everyone here probably has an award at the end, almost all you guys. So definitely stay on for that. And then I just wanted to say too, guys, you've all accomplished so much. You guys see my slides got a little screwed up here, obviously. But yeah, you guys have all accomplished so much. It's just incredible. Obviously, these two things that I have listed, you guys accomplished. But to see you guys, I mean, I was just talking on the webinar yesterday. You guys, like half of you guys, are literally better at product selection and product research than we are at this point. So just really, really incredible to see how far you guys have come. And honestly, some of you guys eclipse me in importing knowledge at this point. Like, off the top of my head, I always see like Greg Jones, Luke Walker, always in there, just killing it with the importing advice. So definitely, guys, was really fun doing this with you. So we're kind of going to talk today about where you go from here. So I'm just going to turn this over to Scott Mitchell. He's actually at our house right now. So I'm just going to put him on my computer. So give me a second. And he's just going to talk through a few common questions that we get. And then also I would really encourage you guys to, if it sparks any other question, definitely throw it in the question box because it's definitely going to be a valuable Q&A for you guys. So without any further ado, I'll switch it over to him. And I'll be in the background here looking at the questions and everything. So definitely chat it up with us. So here you go, guys.
Hey guys, well thank you for having me here. Hopefully I can be of interest and some help to you guys. So Will's put together some questions for me on these slides. I'm just going to go through them one by one, and he's going to help me look at this his monitor here and watch for additional questions. So the first question he's got is, what makes companies valuable? So unfortunately, this is the first time I'm seeing these questions, but I definitely can speak to them sort of in real time. I think what makes a company valuable is its ability to generate profit, generate cash flow. There's obviously other factors involved. What kind of space it's in, what kind of growth rate it has, what type of intellectual property it has available to it, and also one big one is what the market is like. Something is only worth what somebody else is willing to pay for it. So obviously, if you're in a hot market space where lots of companies are acquiring, or if you can position your company to seem like it's in that environment, then it's going to have a much higher value. Kind of demand and scarcity. The second question he has is, how are importing companies valued? I would say that the importing companies are valued, again, on a multiple of cash flow, multiple of EBITDA. One of the ways that when I'm looking at buying companies or selling companies, for that matter, I try to look at some market comparables, just like if we're buying or selling a house. One of the resources I use all the time is sort of the online business or small business marketplaces like BizBuySell, or this is another one that doesn't come to mind right now, Bill. I'll make sure Will follows up with it. But those types of websites list just tens of thousands of different businesses that are for sale, typically smaller businesses. But they do give you what kind of cash flow they have, what their revenue is, what type of business it is, and also what price they're looking for. Obviously, these business sellers have done a little bit of research in their space. They have a decent idea of what their business will sell for. Just because somebody's asking something for a business doesn't mean someone's willing to pay for it. But it does give you a sort of a benchmark for what type of multiple of profit you should be looking for your business. And then again, I would, in terms of evaluating an importing company, I would also factor in things like your growth rate, your product niche, what type of future demand the market perceives your product niche of having, whether you have intellectual property that your company owns, such as a strong brand, trademarks, exclusive distribution rights, or something like that. Going to number 3. Do I need a brand to have a sellable company? No. Again, sort of building off a little bit of what I said at number 2, having a brand, a strong brand, and a recognizable brand is definitely an intellectual property asset that a buyer would definitely value and put some price tag on. It's hard to value a brand. A lot of buyers, and myself included, when I'm looking at buying a company, I'm really a cash flow buyer. So for me, when I look at a business, I look at a multiple of free cash flow. I look at paying a multiple of cash flow. I'm basing that multiple on my expectation of their growth rate. When I look at things like adding on to the amount, I don't really look at brands or even intellectual property. The only thing I do add on are things like cash in the bank if that's coming with the business, or some add backs. For example, if the owner was taking some expenses that wouldn't be ordinary business expenses, like car allowances and things like that, or exceptionally high salaries, I would look at adjustments based on that. But definitely, a brand does add to the value of a business. I would say whether it's significant or not is based on the seller. Based on the buyer that you're selling it to. And it's a really sort of intangible that's hard to put a number on for anybody. So should I eventually try to sell my company? So when I get into a business, whether I'm acquiring a business with the intent of building it and taking it public, or whether I'm building a business with the intent of growing it and selling it, the number one thing that I want to know before I even start investing $1 or making any effort is I need to know what my exit is. Same kind of feeling I get when I walk on a plane. When I walk on a plane, I need to know where the exit door is. And when I walk into a business, I'm in a high risk situation, and I want to know not only how I can get out if the business started to take a tumble for the worse, just like a plane, but also where I'm going to get out and how I'm going to get out when the ride is over, and how I'm going to recognize when the ride's over. So I do think that very few businesses these days are or should be sort of cultivated to be multi-generational family businesses. The kinds of businesses that you guys have been talking about, and certainly in the importing business, I think the way to get your maximum value overall for the business is starting the business, building it quickly, making sure you have a strong growth rate behind you, achieving some reasonably high level of profitability, and then looking for a buyer that wants to acquire it for some multiple of earnings. So again, this is a personal decision. Some people really want to build a business and pass it down to their son and hope that son passes it down to their grandson or granddaughter. But from my perspective, the way to at least get the largest financial impact and financial value out of a company is to build it up, make it a strong, viable company that's generating lots of free cash flow, and then sell it. And I personally have a lot more fun in businesses that are between the $1 and $30 million in revenue mark. Once a business gets too big and it becomes many layers, and it becomes difficult to manage, that's kind of where my frustration starts increasing, and I realize that it's time not only to get out because not just because I want to maximize my financial return, but also because I want to maximize my happiness as well. Where do people buy and sell businesses? So this is one of those answers where I think it depends. It depends on the business's size, and it depends on the business's market. So there's business exchanges like bizbuysell.com that I was mentioning before. And there's also, and that's one route. And those businesses, the kinds of companies that sell well on there are, typically between the $1 and $10 million revenue mark. So maybe $500,000 to $3 million of profit. The buyers that are on there are looking for companies that are like that. You'll find a lot of gas stations and nightclubs and taverns and convenience stores on there, but there are quite a few real companies that have really good platforms and ideas that are building a real business. And there's some savvier buyers that are on there looking for those companies as well. If you're a larger company, larger meaning $10 million plus of revenue with a very sustainable business model, your path is a little bit different. You're probably going to be best served going to an investment bank and finding a banker that's going to put together a book for you and shop your company and do a little bit more target marketing. And what those people are going to do is they're going to already have relationships with the vice president of business development or the vice president of merger and acquisitions at about 100 to 150 different sort of mid-sized businesses, most of which will be public, some of which won't. And they'll know which companies are acquisitive and looking for companies to buy and which ones aren't. And they're basically going to put together a book that's going to put your company in the best light and then market that book to the businesses and try to find a buyer for you. Obviously, they're going to take a commission. It's a lot like selling a house. It's going to be more expensive in terms of percentage of your proceeds than selling on BizBuySell, but it also it's kind of the right market for a larger company like that. And then the other place that I guess the third and final place that people do buy businesses from that not everyone thinks about, but is a public market. So if your company is large enough and sustainable enough and is in an exciting enough space, another option is again hiring a banker to underwrite a public offering for your company and to take your company public, which is, in my opinion, the way to capture the largest financial gain, but the most difficult and risky sort of way to capitalize on your business's value. Is it a complicated process to sell your company? Yeah, I mean, I think it really is. It's one that for those of us that have sold houses in our time, or even bought houses in our time, it's you're never prepared for just how complicated the process is, and it's not overly complicated. But when you sit down at a closing table for a mortgage, like you're always, for your first mortgage in your first home, or whether you're buying or selling, you're always surprised at how many papers are other signed and how complicated the process is, and how much more information the mortgage company wanted. And looking back to about my first house, probably, which was like 20 years ago, but a business is, that much more complicated and that much more difficult to sell. It's not a commodity, so the buyer who's paying a substantial amount for your business wants to make sure that he does his due diligence, and he's buying what he thinks he's buying, and that's not always easy when you're talking about buying a company. The one thing that you'll need to have going into selling your company is you'll need to have clean, solid, organized financials. Most buyers are used to and accustomed to working with QuickBooks. So if you're using that platform for your accounting system, you're probably in a good light in that regard. You're going to want to understand your financial metrics. Know what your day sales outstanding is, what your inventory turn is, know those metrics, and so you can present them and answer questions in a very quick and efficient manner. You're going to want to have to be prepared to tell the buyer everything. So as you're going through building your business, if there's something that you're about to do that you think, I hope a buyer never finds out about this, you can probably rest assured that a buyer's going to stumble across some questions as they're going through their due diligence, and they're going to have they're going to want to know whatever you're doing during that process. Most sophisticated buyers that are going to pay the $10 million and up for a business, they're going to be businesses that are buying or institutions that are buying your business, and they're going to be sophisticated. They're going to have things like a due diligence checklist that might be, anywhere from 10 to 65 pages long. They're going to ask you about things you never even thought about, like whether you're violating any environmental protection agency rules. And they're going to go through everything they can with a fine-tooth comb, not just your financials, but they want to make sure they're mitigating all the risks they possibly can. And then, despite the fact that they've gone through and had this opportunity to mitigate all the risk, they're also going to want to, in an acquisition agreement, they're going to want you to make a whole bunch of representations and warranties that some risks that they've tried to understand, they're going to ask you to represent and warranty that they don't exist, and to the best of your knowledge. And there could be clawbacks provisions where the buyer might get money back if he finds out that you were dishonest or deceived them in that risk. So it is a complicated process. I can tell you that that oftentimes the buyer on the other end may need to go through process of raising capital, and that might take longer than he expected, and he might he doesn't want to lose a deal, so he may try to placate you, and there is this whole psychology of deal fatigue. And sometimes buyers are out there and they want to put together a binding letter of intent so that they have a free option on buying your company for a period of time, and they may do that because they want to look at 3 or 4 other companies, but they don't want to lose you to another buyer if they don't find anything better. Sometimes they have no intention of buying your company, but they put together a letter of intent just to sort of lock you up. It's a frustrating process, and it's a complicated process, but it's not one that, if you have solid business skills and you have sort of a understanding of how things work, that it's not something that you can't navigate through. What if you don't want to sell? How do I grow from small to medium? Well, this is a good question. It's kind of, my best way for growing a business is to, put goals together that are small and micro that you can measure daily, and try to meet them every day, and have that aggregate into goals that are somewhat loftier and longer term, maybe weekly or monthly, and try to hit those every week and month. And then forecast out some loftier goal that might be 2 or 3 years, and work as hard as you can to meet every day, meet every week, and meet every month, and meet every couple of years. And then you will meet every year. And that's it's so easy when you're growing a business to sort of get wowed and to get complacent with all the money you're making and how successful things are, and start to want to have fun with it, and start to want to do things with it, and start to want to deviate from your business model and take things in a different direction and grow things. And sometimes that's great, but not when you're growing from small to medium. Your only goal should be to grow, to create a viable business model, to mitigate risk, to prove that you have a great product that the market wants, that you're selling, that will grow. After you've reached a goal that you never thought you would meet starting out, and you feel like you've run out of gas, like you never thought your business would grow this big, and you don't even really know where to take it because it's grown that big, that's when you really want to take your head out of the water and look around and see what other opportunities are out there. It's a funny thing, like when you start a business, you have all these great growth plans and what you could do, and I could do this, and I can go into this, and I can go into this. And you sort of factor that into your daily, weekly, monthly goals. And then you start hitting a couple of years where you hit all those daily, weekly, and monthly goals. And then at a certain point, you realize, like, everything that I thought I could do with this business and everywhere I think I can take it, I've either completely eliminated the prospect that was a viable option for me to do, or B, already accomplished it. So at a certain point, you realize I've exhausted this. I need something new. And that's where you finally can take your head, pick your head up from your keyboard and look around and figure out, how do I take this to the next level? But that's typically when you've realized you've grown your business from a small to medium-sized business, and it takes time and diligence and hard work and focus and concentration and discipline not to get distracted by shiny bright objects. Great. Okay, so questions and answers. I think Will's going to ask me some of the questions you guys are answering. Will, do you want to do it now, or do you want to do these awards now?
Yeah.
Okay.
Yeah. Oh, absolutely.
Hey,
All right,
Kyle.
cool. Thank you, Scott. Hey, so Carter Martins has asked a ton of really good questions. So if anybody has questions for Scott, put them in there now. The vast majority are from Carter. So his first question was, is it when you were talking about 10 times annual sales volume for estimating the purchase price, or 10 times what?
Well, I don't know if I mentioned 10 times. I may have mentioned $10 million, but the for sale price of an importing business, I mean, I would say this is going to be a broad range, but again, it depends on a lot of different factors. But if you're looking at something like a 5 to 7 time multiple of EBITDA, of basically your cash flow, um, that would be a pretty good return for a seller, and it would be a pretty good return for a buyer. At 5 times earnings, what a buyer's doing is he's buying a company, he's making his money back in 5 years. So that's a 20% return on investment. So if I'm buying a business and it's making $2 million a year profit, and I'm paying $10 million for it, then I'm going to get all my money. If nothing happens, and the business stays in business and it runs and everything ceteris paribus, and there's no market changes, and then after 5 years, I've got all my money back, and everything after that is pure return on investment. It's pure return. So from an investor perspective, that's a 20% return on investment. And that in today's market with interest rates the way they are, that's a pretty good return on investment. But it is risk adjusted. So buying a small business is risky. So they're not going to be looking for a 2% return on investments like they would in a less risky investment, or even the 7% that they might be able to get in the stock market. They're really looking for a larger return on their investment. Because it's a riskier investment and they may not get it back. And a 20% return on investment for an investor in this market for a good, solid small business that has good growth prospects is a pretty good return on investment. Of course, you go 6 and 7, you start getting to a 6 or 7 time multiple profit. You start getting to a lower, smaller return on investment for an investor. They'll still do it. There are buyers out there that love businesses and pay a lot more than that. But they have to do they have to feel a lot less risky about your business to make it worthwhile at those levels. Now, having said that, taking a company public, there are IPOs that get ridiculous multiples of their earnings. Sometimes the earnings are negative, so they get an infinite multiple on earnings, and that's sort of a different ballgame. But if you're selling to a private buyer in the private markets, then for an importing company, again, without having done the research, and it's a pretty broad range. I would say 5 to 7 times return on or multiple of profit is a good target.
Great, thank you. Blake Dodds wants to know how likely it is for someone that has sold a business to want to start another one.
Yeah, so it's very likely. Typically, people, you spend years you're just consumed by this business, and you're passionate about it, and it's all you think about. And you pull your wife or your girlfriend in, and it's all you guys talk about, and it becomes almost like a baby to you. Like literally, it's that big of a part of your life. You build this brand, and people recognize it, and then you're proud of it. And letting it go is really, really difficult. And again, this goes back to when you get on a plane, know where your exit door is. When you get into a business, know where you should get out, because you can't get. You have to fight the urge to get emotionally attached to businesses. They're a financial vehicle. They're not an emotional vehicle. And when you get out of it, all of a sudden it's gone, and you miss it. And it's worse than breaking up with a girlfriend. It's worse than it's worse than a lot of things that you would experience in life. So you have a propensity to want to get back into it right away, and you almost get excited about the prospect of about starting over, and like how much fun it was before, and how much fun it will be starting from scratch, and the challenge and the invigoration of it. And the problem is, like, a smart buyer is going to recognize that, and they're going to do a couple things to stop you from doing that. One is going to be that they're going to have you sign as a contingency of them paying for the business. They're going to have you sign a non-compete. And non-competes when you're selling businesses, again, just want to say I'm not a lawyer. This isn't legal advice, but from my experience, just looking at what types of agreements, what types of non-compete agreements get held up and are enforceable, when someone's paying a substantial amount of money for an asset and they ask you to sign non-compete as a contingency of doing that deal, and you agree to do that, and you take their money and you don't abide by that non-compete, I see that as a fairly enforceable agreement. And I think from my experience looking at some of the case law and some of my own personal experience, it seems like the courts do too. So when you're selling that business, you have to be willing to stay out of the industry and not compete directly with the business you sold for a fairly long period of time, 2 to 3 years, sometimes 5 years. Now, having said that, a lot of people who are selling a business want to stay part of the business that they're selling, even if they don't own it. They want to see it become part of a bigger business and a cash infusion. They want to become an executive of that new business and help run the business they sold, and that's a lot more favorable for a buyer. In fact, when buyers see that, it makes them feel better about buying the business. It makes them think that there's a lot more here to the business to be excited about because the seller wants to stay and become part of it. And it may even increase the price that someone's willing to pay for it. But what it also does is, from a buyer's perspective, he's sort of protecting the management of that business and ensuring and preserving the fact that the business is going to continue running as it was before. And also, there's a lot of institutional knowledge that's involved in running a business. So he knows that despite all the due diligence that he did, he may not have learned everything about the business that he needs to kind of pick up the pieces and start running with the wagon. So by locking the former owner up under an employment agreement, he has the opportunity to preserve that institutional knowledge and make sure the business is going to continue to run as was.
Awesome, thank you. We have 4 questions specifically related to where that exit door is, how to locate it, and stuff like that. So maybe I think you've discussed each of these, but maybe talking to them specifically will help us get a better idea. So the first one's from Carter Martins. He says, so the idea is to create, build, scale it big, and then sell at peak efficiency. Would that be accurate?
I guess the answer is it depends again. And so if your personal goal to business is, hey, I want to build this business and I want to build it to a certain size and I want to have a good return on my investment. So I'm looking to make $10 million. And maybe I'll do another business after that. Maybe I'll retire. Maybe my career, maybe my goal is to do that 3 or 4 times over 15 years. And, all of a sudden I have, a very nice size net worth. If that's a goal, then it's not really, your goal is not so much about scale as it is about risk mitigation and doing profitable activities. So when you think about it, it's not, you're looking at building profit, not necessarily building scale. But if your strategy is, look, I'm going to swing for the fences and I might put the ball right in the outfielder's mitt and be out, but I'm going to swing my butt off and try to get a grand slam, and that's what I'm doing. Then what I'm saying is you're looking to take this company public. You're looking at having a grand slam, and if that's all you want to do and that's your exit door, your approach is different. You're looking at scale. You're looking at building brands, brand awareness. You're looking at you're starting to identify target companies as large public companies, as target companies in terms of being companies that you would partner with and let them acquire you, and trying to find out how they tick and reading their 10Ks and reading their 10Qs and determining what their long-term strategy is and trying to play into that strategy, even though that may not be the most profitable way to go. So it's more about playing a market and building scale and mass and brands and being a pain in some companies' sides because you're playing in their backyard and it's either acquire you or or have you continue to bother them for forever? I mean, it's definitely a different strategy. So, and then the mid market strategy is somewhere in the middle. You're really trying to build profit, and if you can build some intellectual property and some brands, and definitely have scale and growth behind you, and you get to a size that is above the sort of micro mark, then you're in the mid market game. And when I mentioned knowing where the door's at and what your door is, it's not just about the mechanism you would need to capitalize on the asset you built. It's or the strategy you would take. It's also about what am I doing with this business? Am I going to just find a private buyer? If you're an importer, one obvious route to capitalizing on a market, an asset, is potentially selling to your manufacturer. And if that's where one of your exit doors are, then you should try to have really, really good relationships with your manufacturers. Visit them often. Make sure they understand your business model, that they respect it, that they understand the specific uniqueness of how you execute on your model. So I wouldn't be able to sort of describe where every exit door would be. It would be impossible. But what I can say is that identifying what those doors are early, even before you get into it, and having that as part of your own small business strategic plan will pay dividends over time.
Okay, yeah, that was a really thorough answer. I think that answered pretty much all of them. One person had a specific question about all the exit door questions anyway, but that when you're thinking about exiting a company, does systematizing that company have anything to do with it? The exit plan, is that what you're aiming at, or is that something that happens as a tool that needs to work to get to the exit plan?
Yeah, I mean, I think it's a necessary evil that you have to get big enough to make an exit worthwhile. So what I mean by that is that if you don't have a good accounting system, you don't have that systematized, it's going to be difficult to generate $10 million in revenue if you don't have a decent accounting system that's well thought through and well systematized. If you don't have a systematic process of accepting goods in, and an inventory tracking system, and a CRM system where you're understanding your customer and understanding their purchasing behavior, and using that to drive sales, and a good automated system to help you manage your online marketing and manage your Amazon and eBay sales. If you don't have all that, it's really going to be hard to get to a size that is really going to matter for an exit. At least the size that I would get a sense of most of the people on this webinar are looking for. But in addition to that, it's really, really important that you not only have it for your own company's efficiency, but your profitability is ultimately going to be determined on how efficient your company is, and your competitiveness is ultimately going to be determined on how efficient your company is. So to the extent that more things are automated and more things are more efficient, the more valuable your business is going to be. But not because a seller is really going to recognize that, a buyer is really going to recognize that. A buyer is going to recognize your cash flow, and he's going to say, "Wow, look, this company has a gross margin of 66%." But they have a net margin of 30%. So they're only using, you're only using half of their gross margin for sales, general administration, and this is a really efficient company. Now, having said that, sometimes systems can be a hindrance to selling your company. I've come across companies that when I ran public companies that I started, and we were very acquisitive. I came across companies that liked their business model, liked their management team, making money, agreed on a price, things were good, but then I just realized their systems were so screwed up, or sometimes their systems were great, but they were so complex and so hard to integrate into what we were doing. And I would have my IT team spend months looking at their system and ask them, can we maintain it? Can we sustain it? Can we integrate it? And the answer is no, no, no. I just walked away from a couple deals because of that very reason. Just because they're homegrown systems, bespoke systems. They were too complex. They were too convoluted. They made the business more efficient, but not for me, not for the buyer, only for the seller that had that specific institutional knowledge. And the likelihood of me keeping on their entire IT staff and being able to sustain that system was very low. So yes, it really is important to systematize your business, make it as efficient as possible. As you're doing it, again, have your exit plan, know where that door is in your mind, and realize that if I go down this route where I'm custom developing all the software and I'm custom developing all these systems, is it going to make my company more valuable? If it's going to make it more valuable because it's going to make it more efficient, I would say it's almost always worthwhile. But if there's a way to make it more efficient, maybe a little bit less efficient than customizing a process or a piece of software, but there's a way to make it more efficient and be more easily integrated by a buyer, and your goal is to sell the business and make it as valuable as possible to a prospective buyer in a smaller market realm, then I think that you have to have those things in mind when you're making those decisions on a daily basis.
Okay, great. One of the participants, Stan Hathcock, has exited 5 companies, and he commented that the time to sell is when it is no longer fun and you are starting to lose interest. Then you need to change directions. What's your opinion on this, or your personal experience with the fun factor?
I mean, I completely agree with Stan. The time to sell is when it is no longer fun and you begin to lose interest. I mean, the amount of dedication, time, effort, focus, mental drain your company will have on your shoulders is huge, and you'll love it when you love doing it, and you'll love it when you're passionate about it. But as soon as you lose that passion, you'll hate it. I'd like to build on what Stan said for a second. And I've seen a lot of people build a lot of great businesses that sold because they lost the passion for it, and they sold when they lost the passion for it. And they walked away leaving millions upon millions of dollars on the table because they just couldn't stick it out that extra year or that extra 18 months and position their business for a sale better. Because they didn't want to take the time and clean up their financials better, and they didn't want to take the time and finish a couple projects that were going to show additional growth. And they didn't sort of prep their business for a sale. When you're buying a business, it's a lot like buying a car, in that even though you're looking under the hood a lot and you're asking, you're going through the diligence checklist and you're asking for representations and warranties, and you want to make sure the business looks good, the books look good, and the people look good, and the customers look happy, and the revenue looks sustainable, and the profit seems reasonable and sustainable, and that all comes from sort of polishing the car before you sell it. So I've seen a lot of people just get sick of their car. In other words, to use my analogy, and to build on Stan's example, but just get sick of the car and put a for sale sign up, and the first person to drive by on the road and give them an offer, they would say, sure, take it. And these businesses aren't a commodity. They're very, very unique assets. So to the extent that you can spend some time, even when you lose your passion, and just put in an extra mile to polish it up and to take it through a car wash and to detail a little bit and, spit on the bumper and give it a little bit more shine, that's important. And that when you're talking about a few percentage points increase. We're talking about going from a multiple of 5 million, or a 5-time multiple to a 6-time multiple. In doing that, and you're talking about a $5 million business, you're talking about going from $20 to $30 million. You're talking about a $10 million difference. And I think that there's very few people that I know that wouldn't spend an extra year doing something, even that they were starting not to like so much, for an additional $10 million. And more to the point, not only the additional $10 million, but a lot of times these businesses get sold into larger companies, and it's almost incumbent on the seller to sell their company after it's sold. And what I mean by that is that for all of us that have sold companies, there's a certain type of pride that goes along with that your company survived and sustained and added value to the seller. and that the brands are still around today, and the processes or systems are still working and generating value for the economy, and that you really have it really gives you a little bit of sense of almost immortality. Like, hey, I built a sustainable asset, even though I'm not there, it persists, and in perpetuity, it will survive, and that's a great feeling. So even if you lost the passion, and it's if you won't do it for $10 million, maybe you'll do it for the sense of accomplishment. But whether you do it for the money or the accomplishment, I think I do think it's worth doing. It's worth putting in an extra mile.
That was awesome. So a little bit more of a specific question now. Somebody asked, I'm sorry I forgot to write down who, but does it make sense to finance a buyer with a reasonable amount down and with a provision to retain the business if the buyer were to default? Is that ever a good idea?
So, I mean, I do think I can't say it's never a good idea. And the circumstances may make it a great idea. I can see where a seller would get a much higher multiple under a structure like that. I think and it could work out perfectly. And I'm not even saying it's a bad idea at all. Please, even though I'm starting out this answer seemingly negative on the structure, I'm really not. It really all depends on the circumstances. But I think some risk points that the seller really has to understand, and some things that have to be ironed out in that case, are you're securing an asset, a cash flow generating asset with itself. And cash flow generating assets are unique assets are almost by definition fragile. And the question you have to ask yourself is, who controls that asset? Who's preserving and protecting that asset while it's serving as collateral for the seller's money? Because if he gets it back, does he even want it then? What's the asset look like? I mean, certainly there are many things in the physical world that people would not, they're so unique and so fragile that people would not underwrite a sale of them. There are things that people would. I mean, banks give car loans. Banks don't give food loans. So there's, I guess they do to a certain extent with credit cards, but they're not securing the purchase against the asset. So I think the seller really has to understand who controls the asset, how fragile is it. Does a seller have any rights to tell the buyer what to do during a time period when it's just under the buyer's control? And I'd say it's an infinitely more risky situation or structure than just a straight sale, but you can sell risk, right? I mean, risk has a dollar amount that can be associated with it. So if the seller is getting that increase, that a large enough increase in the purchasing price that they feel it mitigates or more than mitigates the risk, then they should do it. I think it's a very personal decision. It's very financial too, but not knowing all the financial details, I couldn't even tell him what I would do.
Okay, cool. I have two questions left. So if anybody has a question, put it in the box. And then after those, Will is going to come in with some other questions. This one's 3 parts. It's what terms and conditions should you set for sale of your company? Should you have a do not copy clause, or can you include a percentage of proceeds for a certain number of years plus a smaller down payment?
So I'm interested. It's interesting that I'm hearing this term down payment a lot. It sort of indicates that a lot of people are considering seller financing, and certainly, seller financing is a way a lot of small businesses are sold. So, but when you're doing seller financing, again, just like my answer to the last question, you have to understand that the asset may be impaired by the time you get it back. Typically, in fact, you almost have to assume that that's the case, because typically, if they default on their acquisition debt, the business isn't going that well, and it's been impaired. And by the time you get back, you have a turnaround job on your shoulders, not just I'm going to run my business again. So that's something to consider when you're doing this. But in terms of the terms and conditions, yeah, I mean, I've seen lots and lots of different types of terms and conditions. I mean, it's almost infinite in how you can do it. There's earnout provisions, so if the company reaches a certain level of profitability, that the buyer has to pay the seller a lump sum. So if the company reaches $2 million of profitability in the first 5 years after acquisition, then the buyer gets another $1 million. If the company reaches $3 million, the buyer gets another $1.5 million. $4 million, it gets another $2 million. So I mean, there's earnout provisions. There's a percentage of net proceeds. There is I've seen situations where seller financing, but 65% of the profit has to go into an account that can only be used if the business is in dire need. The seller agrees that those proceeds can be used by the business, and then those proceeds are paid out annually. I mean, there's an infinite amount of terms and conditions that can be used to get to get a business sold. That it's all about risk and return. The more risk you take on and getting paid all the money you're expecting, the higher amount that a company or buyer should be willing to pay for your business. And I think that's something that everybody should keep in mind as they're negotiating, is that if somebody is asking for A and A is going to bring more risk to you, then you have to offset that by B, and B is going to be an increased purchase price. So if there's no room in the down payment, like as they're calling it, there's no room in that down payment. If there's no room in that cash and the buyer just can't get any more cash, then there's lots of ways you can increase your potential return on that business if you get paid back all of it. And again, dollars that have the higher risk of ever getting paid to you should have a higher expected return that you're getting for them.
Fantastic. Carter says, great answer. He finally gets it. So we have one more question here, and it's really a comment followed by a question. So essentially, you can, once you sell one business, you can rinse and repeat when you have found a new niche. So what about all of your contacts, suppliers, processes, and agreements that are private knowledge to you that may have multiple products, some of which you may want to use in the future? So in your experience, how much from one business moves into the next?
That's what's really exciting about this importing niche, is that it is, as your questioner said, it is, the rinse and repeat quality is there, and it's rich, and it's hard to carve out. Non-compete, the companies, no buyer is trying to ensure that the seller doesn't work again, or the seller can't do something else, or that the seller has to live on the money that they made from this business and they can't make any more money the rest of their life. The buyer just wants to make sure that they're protecting the asset they're buying from the seller. So it's unreasonable, and it could be asked for, but it's unreasonable for a buyer to ask a seller not to replicate what they've done with this product with some other unrelated product, especially given the vast amount of different products that these businesses can be applied to. It's unreasonable, and quite frankly, it's unfair. So, if I'm an engineer and I came up with this kick-ass new jet engine, and I sold this kick-ass new jet engine to Boeing, Boeing's not going to ask me. They might ask me, listen, don't engineer jet engines anymore, but if you do, give us a first right of refusal to buy it. That could be a reasonable, sort of structure of a non-compete or spirit of a non-compete agreement. They could even say, like, you're done with jet engines. Don't engineer jet engines anymore. We don't want the first right of purchasing. We just don't want them out there. Like, just don't engineer them. That's even a reasonable spirit of a non-compete that Boeing can do. But it would be completely unreasonable and quite frankly unfair for Boeing to say, not only don't engineer jet engines, but don't engineer anything. Anything. It would be preposterous. So that would be akin to what a buyer would be saying to a seller in this space, is that don't use your specific unique skills that you've developed and apply them to any other industry, whether it competes with us or not. So when you guys are negotiating through selling your business, be very sure that whatever non-compete they're asking for is fair. Understand that they have to protect their asset, and that's all they should be protecting. And if they're asking for anything more, it's unfair. And I would appeal to their own self-centered objectives. If they do, say, listen, I may go do the same thing with some other completely type of product. It doesn't compete with you at all. And maybe you love buying this business that I built you so well that you'll want that business too. As long as it doesn't compete with the asset I'm selling you, then why I'm selling you today, then why would you care if I do the same thing in a completely different, unrelated category that doesn't compete with the asset that you're buying from me today? They're in this business, in the importing business, they're going to have competition that's outside people who are importing. They're going to have domestic competition, plenty of that to worry about. So as long as you're not, as long as you can guarantee them or agree with them that you're not going to be one of those domestic competitors or an importing competitor, then why should they care? So my answer is, like, you should, this rinse and repeat aspect of this business is a very, very appealing quality of it, and I think that it should be easily protected when you're going through a sale of this business.
That's a great answer, and I think that should help a bunch of people too who have been hesitant to share their products or even show them to suppliers because they're afraid of them getting copied or something. I think it's important to remember you have that skill. You've developed the skill, so now you can use that forever. But that's all I have, Will. Sweet. Okay, well then I have one more. Earlier you talked about your goals, how you set small goals and then big ones, and then they would build up, Scott. And that seemed to be pretty exciting for people. A bunch of people commented on it. I think Stan was like, it's like Lego blocks, And so when you're able to focus on the one step in front of the next, I thought maybe you could go into a little bit deeper on how you, one, set the goals, but then also change them as you get new information and stuff like that, how they evolve.
Yeah, I mean, everybody's got their own system. I don't know if mine's really that much interesting or revolutionary than the next one. There's the Carnegie method. I mean, there's lots of ways of organizing your time, organizing your goals. I'm a list builder. Like, I build lists. Like, I'm not talking about like emailing lists. I'm talking about just pieces of paper and lists. And now I also use the iPhone or iCloud reminders. I just build list after list after list. And my goal every day is that I count my things on my list at the beginning of the day. And by the end of the day, I want half of them off my list. And it seems to have worked for me. And it sounds silly, but that just helps me sort of day by day. And then for every day, I have a sales goal. I have a sales goal, and then every week I have a sales goal, and I have a gross margin goal. And every month I have a sales goal, gross margin goal, and a net margin goal. So I evaluate those all the time, at the regular intervals, and adjust appropriately. And I know if I'm driving sales, sometimes I have to drive sales to meet the sales goal that may not have the gross margin or the net margin associated with it. But I'll take the sales that day to get it. But I'll know that the next day I have to be that much more vigilant and protect my margins so I can meet my sales goal and make more margin back that I lost the previous day. So that's literally how I manage my week. I have lists, try to clear half of them. I have sales goals, I have revenue goals, I have daily revenue goals, I have weekly gross margin goals I keep in mind, I have monthly net margin goals I keep in mind, and measure them continually, and keep your head down and work your ass off, and eventually you'll pick your head up and look around, and you'll have a real business. And that's always worked for me. It's simple and not exciting, but it's always worked.
I think simple is better in that case. So there's a couple lawyer questions and comments. Blake Dodds asked, how would you choose an attorney and or consultant to help you complete your the sale of your business?
So that's a good question, and the answer is that my honest answer is that I wouldn't put a lot of eggs in that basket. An attorney is important because there's going to be documents, and you're going to want them reviewed, and you're going to want to make sure every I is dotted and T is crossed. And a consultant could be useful because he can help you market your business and think about ways to market it that you didn't think about. But ultimately, this has to be a train that you drive, because your emotional attachment to this business is going to be greater than any attorneys or any consultants you're going to hire. And depending on the size of the business and your history and what your future could hold, this could be the largest transaction of your life. And whether it's the largest transaction of your life or not, you're going to care about this process. And people oftentimes make the mistake of hiring a really good attorney and letting them be the conductor, letting them be the quarterback, or hiring a really good consultant, letting them be the quarterback. And they'll get deals done. They will. But, I mean, my experience has been is the way to maximize your return is to make sure you're your own quarterback and make sure your attorney is a member of your team, a valued member of your team, an important member of your team, a respected member of your team. Make sure if you're hiring a consultant that they're a respected member of your team. But I wouldn't put, I would make sure you hire a good attorney, not a great attorney. Make sure you hire a good, if you're gonna hire a consultant to help market it, make sure you hire a good consultant, not a great consultant. Because ultimately you're going to care about doing that. You're going to care about this transaction much more than they are. And by the time you've built a great business that's worthy of taking out there and selling, you're going to be as confident and as worried about how to market it and who to market it to than they are. I've seen a lot of business owners hire consultants to help market the sale of their business, or business brokers. And the reality of it is that they're learning on your dime and they're learning from you. And this is a smaller businesses, right? They're basically learning from you. Okay, like tell me about the target audience for your business. Tell me who I should pick up the phone and call and talk to. Tell me about the companies that might buy your business. Tell me about your industry. Tell me about your business model. Give me the lay of the land for the industry so I can go out there and market it. So I need to learn from you. When you're getting into like mid-sized businesses where you're actually hiring like an investment bank to market your business, that's when they're actually working with contacts that they have already, with relationships they have already. It probably would be difficult for you to get in that door, even for good salespeople to get in that door. So it becomes a little, when you're targeting, a $50 million sale, even a $35 million sale, it becomes a little bit more meaningful to hire an investment bank. An investment bank should also be providing you with legal services. And even then, at that size transaction, you should have your own lawyer to represent your own interests as well. That is more independent from the investment bank. So, and under that scenario, I think that the best reference, the best reference for investment banks is really, looking at the Wall Street Journal, looking for, going through Google and doing searches on closed transactions, press releases for closed transactions, and see in your space what investment banks have represented the most companies and had those companies come out of your space with good transactions that you would be happy with, that you'd be comfortable with. That's the investment bank to call. And typically the specific banker that worked on a deal is quoted in the press release, or at least mentioned as a nod in the press release. So you can almost call that banker and say, listen, I have a similar business and I'd like to talk to you. And that banker will, like I said, write a book for your business, market your business, talk about fees up front, they will, they'll have attorneys on staff that'll help you. But in addition to that, you should hire your own attorney at that size transaction so that you have independent counsel away from the investment bank, and it's a little bit larger process. And then if you're taking it public, it's a completely different process. So it really, it really in either, I guess in either way, if you're small enough to where you're sub $25 million sale, I think it makes a lot of sense to make sure you're your own quarterback and you have a good attorney who's advising you, and if you're going to hire a consultant, make sure it's a good consultant that has experience in your specific type of business in that specific market and has relationships that are going to help you rather than you tell him who you should have a relationship with. And it's and I think if you give the reins over to a consultant or an attorney and let them run with it, I think your likelihood of having a transaction that you're really, really happy with is lower. I think having a good attorney who's a member of your team and having a good consultant that's a member of your team, if you decide that you have to, is a much better route.
Fantastic, thank you.
And so I'm going to turn the microphone over to Will, who I think has. He wants to. Are those other questions, Kyle?
Yeah, that's all the. Unless Will, did you want to ask some more, or did you want me to go through the bio? We can hear you.
Oh yeah. I'll give the mic over to Will for a second.
Hey guys, sorry about that. My microphone on the other computer isn't working. So the one other question that I saw in the group, then I'll take it back over and we'll do awards and everything. But yeah, could you just talk quickly about, the company you're in right now? I believe this is your first company with physical products. So this is, really the first time dealing with, a huge element of it. So could you try to talk about like the challenges of that, how it's been different, and, where you've seen like a lot of growth opportunity and that sort of thing?
Sure. Well, this is like Will said, my career has been in mostly technology and internet businesses, and had a lot of success, sort of similar to what your one questioner mentioned, just kind of rinse and repeat. So build an internet company, take it public, realize that it was a great model, do it again, do it again, do it again, do it again, and it was a lot of fun. But it got to be old. It got to be, I felt like I was. In the Groundhog Day movie, I was just doing the same thing again, facing the same challenges, facing the same problems, and it wasn't difficult, but it was just I had lost that passion. So I figured out my last one. I decided I wanted to do something completely different. So I found an industry I knew nothing about, that wasn't a tech business, that wasn't it wasn't an immediate business or anything I had been involved in before, that dealt with physical product, and that I thought was in a segment that could be interesting for me, and that I could really help grow and apply all of my internet skills and knowledge about online marketing to help sort of add some marketing fuel too. So I came across this company that basically does organic professional salon products, and they're an importer. And they had established brands overseas, nothing substantial in the U.S. They did have an exclusive distributor in the U.S. that was, had the line, had marketing a line, and not doing badly with it, but definitely not reaching its potential. And I purchased that company from them. I was doing about $1 million a year in revenue. And I grew that company in 3.5 years now. This year we should do somewhere about 32. So it's been, it's grown reasonably fast. Things that I've experienced in it that are different than the online space is that, the potential for huge explosive growth. The growth we went through was breakneck by any measure by anyone's measure. But it's definitely a slower growth than I experienced online. And I think the big determinant factor for that slowdown, that difference is that it's difficult working it's more difficult working with physical product and digital product. When you're dealing with digital product, your ability to manufacture product is infinite and it's instant. When you're dealing with physical product, you're at the whim of the shipping companies and the weather when you're importing, containers on a barge, and your trucking companies and customs and things like that. There's just more. There's more sort of work that's involved in making sure that goods are available and the goods are in good condition. But the upside is that the ability to compete ferociously actually in a given market is the ability is enhanced because the barriers to entry, which really are dealing with those physical products and getting access to them, making them unique, and it's more difficult to do that with physical product than it is with digital product. So it's got its pluses and minuses, but the interesting thing is that it's been it's definitely showed me, definitely given me what I was looking for, which is something different, and definitely learned new things. And one of the new things that I've learned is that I'm not used to. The first time we ran out of a SKU that we were selling, it was kind of like, what do you mean we're out of a product? What's that mean? I mean, it was logically I knew what it meant, but it just was not something that in my former businesses that I built, it was something I had to worry about. And at this stage of my company, we're doing acquisitions, so we're acquisitive. We haven't announced it, but we just closed our acquisition last week of our biggest competitor. So it's been interesting and growing well, and definitely a viable, stable business. And I do know where my exit door is, and it's something that or it's another thing where I'm sort of preparing for and have been working on for since the beginning.
Wow, yeah, that's that's fantastic. So let's see. There's no ready questions. Does anybody have anything else to ask Scott, or do you want to get into awards, Will?
Yeah, I'll do awards real quick. Give me 1 second, and I'll switch back over and everything. So give me just 1 sec.
Okay. Yeah. Then Scott, if there was one piece of advice or encouragement that you could leave the group with, what would that be? What's the most useful thing you've learned?
Oh, sorry, I just jumped back on, so I'll ask him.
Okay.
They asked, what's the most useful one piece of advice you could give them, all as new entrepreneurs starting out?
And especially the most useful piece of
Dan Nguyen, actually, as I asked that, said, what kind of advice would you give to somebody on a limited budget? So even keeping that in mind, limited resources.
Yeah, I mean, this piece of advice doesn't cost any money. It just costs, sacrifice and trade-off. And but my best piece of advice is don't give up. Like it's the one thing that I'm seeing more and more today. I've called myself an entrepreneur since I was 9 years old, and so it's that was back in the early 80s. So, and I've called myself an entrepreneur through times when whenever you said you're an entrepreneur, people thought that meant you were chronically unemployed. And the word entrepreneur has become almost sexy and appealing, and everyone is calling themselves an entrepreneur these days. But the one thing I'm seeing like time and time again with new entrepreneurs is an almost insatiable ability to give up. So I've seen 10 businesses, I've seen 1 million businesses get built up to a point where I would just be like getting pretty excited, like this is it. I haven't seen any daylight. I haven't seen any break in anything. I don't know if this is ever going to work, but I know that I've got something here that might or could work. And if I don't get discouraged, and if I keep just, again, my nose to the grindstone, I think this could be something. And that seems to be where like everyone gets discouraged. So they get turned down. The product doesn't go to market. It doesn't get accepted to the market as it should. And rather than regroup and go back to the drawing table and revise and rethink and recalibrate their beliefs and their vision, they stubbornly stick to the vision that they settled on when they first started. And rather than improve that or revise that based on new information, they'd rather just throw everything away. I mean, it's almost like a roller coaster. You're going up the hill, and right when they get to about the top and they're about to go on the ride of their life, they just get off the ride. And I'm not sure what is driving that, but that's my best advice to new entrepreneurs is never give up. Because even I've seen people, I'm sure everybody on this call has seen businesses that have started up or has come across businesses that have started up as one thing. In 2 years or 3 years later, they're doing a completely different thing, but they're viable and they're profitable and they're growing. And that's the sign of the guy who had a vision and changed his vision because he had new information and learned something new and was a good steward of his own effort and his own money and didn't stubbornly let his vision get in the way of what he can really build. And that's my best advice for new entrepreneurs. Just don't give up.
Thank you. There's, I think, a really great follow-up to that, and this will be the last one, you guys. But Dan Wen says, if Scott was to lose everything and start all over again with nothing, how would you restart?
So being an entrepreneur, that's not. It's not a scary question. It's an exciting question. I think I miss the days of being hungry. I miss the days of make it happen or do it or die type of thing. And the way I would start is I would look at whatever change I had in my pocket and look at what relationships I still had around me and try to raise a little bit of money, try to put together a business plan, raise a little bit of money and make a profit really fast and try to use that profit to either raise more money or to invest back in a business and to build a business. So I would be looking for very, very fast turnaround of profit. And I really think that the segment that you guys are in definitely has that quality and has that appeal. I mean, I think it's a really, really exciting segment. And I think some of the environmental conditions that people talk about, like the emerging middle class market in China, and goods not being as cheap as they have traditionally been from there in the future, those are not big risks to this business. The fundamentals of your business are buying something someplace else that you can get for slightly cheaper or slightly better, and making a market for them here in the States where one either doesn't exist or is underdeveloped. And that does have quick profit turnaround. It does have the rinse and repeat aspect of it. It does have your ability to work across multiple different industries and different market segments. It gives you guys the ability to be agile and nimble in your approach and address different markets at different times. I really think it's a set of skills that acquired and refined and executed well are applicable to lots and lots of different products and can help build empires.
That is a pump up answer. Thank you. Yeah. So, Will, you want to do awards? Yeah, that was so. Yeah.
Okay.
Got me pumped.
Definitely. All right, let me get all set here, guys, and we will do our little award ceremony here. All right, I think I got it all set up here. All right, guys, so here's how it's going to work. Basically, we just put an award ceremony together with you guys. As you guys know, we're a huge fan of all you guys. We're really impressed with how awesome the group turned out. Really, it's, surpassed our expectations. So I really hope it surpassed your expectations, too, and you guys saw the value in it. because really, I mean, you know, with how great this turned out, I mean, $500 was really a steal for it. So I really hope you guys had a good time in it. And it is really sad to see it stop. But like I said, we have an award ceremony here. So I got 3 pages of awards for you guys. And you guys all know about the importing from China trip. You know, we're all going over to China for the Canton Fair for 2 weeks in October. So basically what's going to happen is we're going to give 1 seat away for that just to people in the Jumpstart group. And then the other one's going to be for, you know, the general audience. So here's how it's going to work. If you guys got an award here, the first page, everyone's going to get 3 entries into the contest to win the trip. The second page for awards, you guys get 2 entries, and the third page for awards, you guys get 1 entry. So everyone on this list here has a very good chance of going to China. And if you guys think that I missed you, definitely just put it in the chat box. I'm sure there's some people that you know, we unfortunately didn't catch the name of, but you know, this is just people that have been really helpful in the community, and people that have been really just awesome to hang out with. So here, without any further ado, guys, and I know a lot of this first page is actually on the webinar. This is, you know, our regular. So first place, this is someone that we just appreciate so much. And Kyle, feel free to jump in here if you want to say anything about any of these guys. So first place,
I love them.
There's no, yeah, well, yeah, definitely love them. So there's no places here, no order, but here it is, guys. We just appreciate this person helping out and taking notes on every session and uploading it to the Facebook group. And I'm sure you guys already know who it is because their notes have been so helpful. Yeah, everyone's already yelling it. Tara McKee.
Woo!
Yeah, thank you so much for everything you've done. So we're definitely gonna have 3 raffle tickets in that drawing. We're literally gonna put your guys' name in a hat and draw it out. So you have a very good chance of winning that trip. This next person has been someone that's just been incredibly helpful and successful with the program, and you know, they just helped so much with their own experiences in the groups that, you know, I figured we had to add them in here. So again, in the first group, Greg Jones. Been awesome hanging out with Greg Jones and seeing how far he's come. You know, he was already pretty successful with it, but after going into it more, he's just become more successful with it, and he's helped so many people out too with everything he learned. So thanks for being so generous with your knowledge, Greg. You'll have 3 raffle tickets in there too. Cool. And I wish I could show you guys the question box because it's quite active right now. Everyone's getting a lot of congrats. So
I'm trying to push them all up there.
Yeah, definitely. Next person, someone that has definitely made a name for himself today alone. Definitely one of our best Q&A people, always asking the best questions. Carter Martins has been an absolute joy to work with. And it's always great to see Carter in the Facebook group too. I don't think anyone has given a warmer welcome to the new members of the community than Carter. So, you know, we just appreciate that so much, Carter. Everyone's saying Carter rules in the question box. So yeah, Carter, you'll have 3 raffle tickets.
Carter and Tara have met up in person too. So
Yeah,
they must be
awesome.
Conspiring.
Yeah, definitely. So yeah, you will be in there too. And then another person, this is probably our most successful person in the group so far, and they've also just been a joy to work with as well. It's been Luke Walker. A lot of you guys have seen his stuff. Now making over $40,000 a month on the importing gig, I believe. So he's just absolutely killing it. I don't know if he's here today. I haven't seen his name, but he has been killing it and helping everyone as he, you know, kind of figures out the trial and error, you know, going along that. So thanks a lot to Luke. Let's see what else we got. Eric Jobinen, another, I don't know if he's here today, but he's always just had a lot of great questions too, very similar to Carter. So you guys just, you know, the fact that you've asked such good questions just helps so many other people in the group that don't ask the questions, and let alone the people that see the recording. So really do appreciate you guys doing that. And let's move on here because we got some more.
Tara just said that her and Carter are meeting up to go for barbecue and boating next weekend.
Oh yeah,
that's so
awesome.
cool, you guys.
Yeah, it's amazing. Yeah, the community's so strong now. We don't even have to recommend you guys get together. You guys just make these. You guys have retreats going yourself now. So
that's so awesome. Yeah.
So that's awesome. Another person who's been an absolute, I haven't seen him too much in the webinars, but I think he watches, every single replay, and he's just so helpful in the Facebook group. Mike Carl has been an absolute huge help to the community. So thanks to Mike Carl. And I don't think he's here today. So
these are the people that make that Facebook group what it is. It's become one of the most valuable assets, and it's because of these guys and girls.
Yeah, you guys remember when we first did the Jumpstart group? We're like, the Facebook group's there. Probably won't be the most valuable thing, but it really has become one of the most valuable parts of the group. So, and then another person we wanted to recognize was Stan Hathcock. Just a great expert himself. Actually, his comments and questions and everything always blow me away. And he's just been such a huge help with cultivating the community, too, so that's awesome. You'll get 3 raffle tickets. Danny Young has been just a ball to hang out with the whole time, so she's going to get 3 raffle tickets. And I think that's our first Australian with 3 raffle tickets. So Danny's on today, I know. Hopefully she's by the computer. I don't see her. There she is, yeah. So congrats, Danny. You'll get 3 raffle tickets. Susan Legowski, been a huge ball of fun. And was really, really active in the beginning. Kind of dropped off there for a few weeks, so we missed you, Susan. But now that you're back into it, when you are here, you're just so much fun. So we put you in that group. And last one in the first group is Kevin Donahue, who's been an absolute joy to work with too. Just great questions too, and has really come a long way. So we're impressed with that. And
He said I can win the sarcastic poster award.
Yeah, definitely.
Yes, you can, Code.
People that crack us up got on the list. So. All right, so everyone in there will get 3 raffle tickets. So you guys are all getting 3 raffle tickets and have very good odds to go to China with us for free. So that'll be awesome, and we'll keep you guys updated on that. Now, this is for 2 raffle tickets. These are people that have just been awesome to work with, great help to the community as well. Didn't go quite as above and beyond as the Tara McKees that are taking notes every time, and Carter taking notes and stuff, and the mind map. So this is didn't go above and beyond, but definitely awesome to work with. You guys all get 2 raffle tickets. Depeche, you're the first one. Depeche has been really dedicated, really trying hard to get this business started. And he's really come a long way too. So he's always been very active, and a lot of people are friends with Depeche too. So Depeche, you'll be getting 2 raffle tickets. Levon Beck, our youngest member, has just come so far, and you wouldn't believe, the kid's 15 years old now. I think by the time he's my age, he's going to be killing it. So definitely wanted to get Levon in there. Scott Gelb has been he's been actually very successful with the group and very helpful with the Facebook community. So actually, Scott Gelb, I'm actually going to put you in the first group. We'll give you 3 raffle tickets. Robin Alex, also great. I know I saw you on today. Always asking good questions in the Facebook group, always trying to help out. Just been great to work with as well. Mitch Maudlin has been awesome. He's really helped spread the word about Startup Bros on Facebook, and he's just been great help to us too. Richard Ola, been great to work with. Seen you in the Facebook group a few times. Not the most active of this group, but the few times he is active, it's been good. Audrey Prince has been a great time to work with. She's just come so far, so much improvement there. We just wanted to give her a chance. Nina Ellis has been great to work with. Has dropped off the past couple weeks, but I trust she'll see this and see that she got her 2 raffle tickets. Max Power, also awesome to work with. Another Australian, I believe. So yeah, guys, and I got some news for Team Australia in a few minutes too. We got a lot of new members for you guys too. So everyone on this page is going to get 2 raffle tickets. And the next page, there's a few people on the next page, and these people all get 1 raffle ticket, and that'll be it for the raffle, guys. So if you see your name up here, you have a very, very good chance to come to China with us for free. So Mike Charlie, I'm just going to run through this one. So Mike Charlie, Lulu Liu, Slobodon has been great. George Men, I know I'm saying this wrong, and I know you've told me how to say it, and I still don't know. I'm sorry. Xing Dong is on the list. Dawn Marie Oliver has been great to work with. She's actually getting a job at Amazon through this whole thing, so great to see that. Jerry Samuel has been great to work with. Great questions and everything whenever he's active. Dan Wynn, same story. Great questions when he's active. Danny Crow, Blake Dodds, Gordon Flett, and Angie Hine. All you guys have been just, again, not the most active group in the world, but when you guys are here, you add a lot of value to the group, and we do appreciate you guys being here. So everyone that saw their name there, you guys all have a raffle ticket, and I think our giveaway ends in about 45 days, so it'll probably be, you know, another few weeks at least before you hear anything about it. But we'll be drawing all your guys' names out of the hat, and we'll see who's coming to China with us for free. So that'll be awesome.
I gotta say, Susan's tearing up. She's crying, and she says, "I am so not a sappy chick."
Oh,
that's why we love you, Susan.
I didn't mean to make you cry, Susan. I'm sorry. See, it's because she wasn't on the first page. She's on the, or was she? I think I did put her on the first page.
No, she was on the first one.
Oh, okay, there you go. Yeah. Sorry. Yeah, that was perfect. Cool. All right, so yeah, guys, everyone on there, great odds. You like probably 1 in 90, 1 in 100 odds. I don't know what the math is there, real quick, but you literally under 1 in 100 odds to come to China for free with us. So that'll be awesome. And we'll be drawing that in probably 30 to 40 days when the giveaway is starting to wrap down and end. So we might update you sooner, but that's who the raffle's going to be. Yeah, and Dan Wynn, yeah, we'll do that. Dan Wynn actually just gave up his raffle ticket to the group, so thanks to Dan. I'm sorry about that. So, okay, guys, so as you guys all know, this is the end, unfortunately. So it's going to be, you know, really sad to stop these weekly webinars. They've definitely become, you know, something we look forward to every week. So it's really going to be sad to lose you guys. Basically, guys, the next Jumpstart group that we're doing, we're going to do this one more time. And the next Jumpstart group we're doing is going to start in about a week and a half. We're going to do it on, I think, August 12th or August 7th. And it's going to be the same story, 12 weeks. You guys know the deal. So you guys are all welcome into this group, and we're going to give all you guys a huge discount. The reason we're doing that is because you guys are already experts in everything. So we assume that, you know, if you get back in, you know, you're going to have, you know, less really hard questions to ask. We think you guys are such experts already that, you know, it's going to be really just a fun time to have you guys in. So we want to get you guys in at a huge discount. You guys are going to get access to the next round of 12, and you guys know it's actually 13 weekly webinars. So, and this time it's actually going to be a little bit better for you guys this time, I think. Edmund and I are actually partnered up on this one. So you'll actually get full email access. Edmund now answers all the emails in the VIP box. So you'll actually get 24/7 access to Edmund and Kyle and I, along with all the other experts. It's really going to be fun. Edmund's bringing in a whole bunch of his partners. So you're going to have the CEO of V-Trust that we talk about all the time is coming in, the CEO of Star Prototyping, Edmund's lawyers are coming in. So it's really going to be very, very extensive. So you know, if you guys aren't pros already, you know, if you're not where you want to be with this would be a good opportunity for you because, you know, you can get a fresh start week 1. And, you know, you're just going to get 24/7 access to Edmund and all of us. So it's really going to be good. With the new guest experts and everything, we're going to have twice as many guest experts, twice as valuable for you guys. So definitely want you guys to be in there. If you guys want to get in, we're giving you guys, I don't know what it is exactly. It's probably a 70% discount or something. So you guys will get in for a huge discount. Here's the Join Now link for the discount and the payment plan link. So if you guys want to get in, we would love to have you. Now, don't worry if you guys don't want to get in for the next round of webinars. Don't worry about it. You guys are still going to have access to all of the previous reportings and everything like that, all the resources sections. You guys are going to have access to that for years to come. And you're also going to have access to the community and the Facebook group and everything. So really you're paying for continued access to the VIP email, which is now going to be me and Edmund responding 24/7, and the next 13 weekly webinars, which are honestly going to be just as good, if not better, than the last session. So that's for all you guys. If you guys want to join in on that, we would love to have you. And obviously, we'll be hanging out with you guys for a long time in the Facebook group and stuff anyway. So, and then for those of you who want to come to China with us, I know a lot of you have been asking. Here's what we're going to do. Just email me at any email, so will@startuppros.com, vip@startuppros.com, and just let me know that you're interested. Here's the dates right there. Now, here's the thing, guys. It's a $10,000 trip, so anyone that comes with us is going to pay $10,000. You guys, since you guys are, again, experts, and we think that, you know, it would just be a value add to have you guys there, we want to get you there for as cheap as possible. So you guys are going to get a massive discount on that. We're thinking anywhere from 75 to 55%. Over 50% discount on that you're going to get. So definitely, if you guys are interested in that, email me, will@startuppros.com, vip@startuppros.com, And this is going to be application only, guys. We're going to, literally get in touch with everyone, make sure that we don't get any bad apples in there. And so if you do want to get in touch, it's not like you can just pay me. You're going to have to get in touch, and we'll talk it out and do it from there. So definitely give me an email. I know most of the guys in here, you guys would all be past that application process. You guys are all awesome. But definitely send me an email if you're interested in coming to China with us, and that'll be a whole heap of fun. So guys, that's it for the first round of the Import Jumpstart group. And I really hope that you guys come with us for the next round. It's going to be a lot of fun, and I'll put that information up for you guys again. And I guess we'll hang out for a few minutes and do some Q&A and whatnot before we go, and make sure no one has any questions. So, Kyle, you see anything interesting? And I'll put those links in the chat box too, guys, so you can just easily click them.
So Carter wants to know when we're going to announce the big winner.
So we don't have a date set yet. I would say late August. Probably late August. We'll probably come out and say who the two people that won the China trip.
Jerry wants to know if you can access the webinar done with Edmund a few hours ago, the one you guys did in the wee hours.
Yeah, so yeah, definitely don't feel bad if you missed that webinar. We did one at 5 a.m. today, so don't feel bad if you missed that. That was just that wasn't a VIP webinar or anything. You guys already know all that and a lot more. But yeah, we'll be putting that replay in the members area tonight as well, so you guys will have access to that.
Okay, James wants to know if he's going to have access to the VIP emails after this.
James, so to an extent, we'll answer stuff as we can, but like we said, we're going to get a whole new group of 250 new importers in. So the VIP email is going to be mainly for them. You guys will probably get more value out of us through the Facebook group. And again, if you do need extended access to the VIP email, there's never a better deal than this. $197, and you get unlimited access for the next 3 months until we go to China. Actually, if anyone that's in this next group will have unlimited VIP email access to us. So, and it's really awesome too, because before it was just me and Kyle watching the VIP email. Now we have 6-7 people watching the email, have it on their phone 24/7. So you guys have probably noticed stuff's getting responded to much quicker and much more in depth. So yeah, definitely, if you guys need that VIP email access, this round's going to be even better than before.
Yeah, Edmund has been tearing up those emails, you guys. So, yeah. When does the next Jumpstart session begin?
The next session will start, again, we're thinking August 12th or August 7th. We need to nail down the special guest experts. Like I said, the experts this time, Edmund's bringing in 4 or 5 people that are just, on a whole nother level with importing. So, his import-export lawyers coming in, the V-Trust CEO's coming in. So a lot of guest experts here that are tough to pin down. So we're just getting those schedules pinned down, and we'll release the final date here in the next week or so. But it's definitely going to be August 7th or August 12th.
So, Stan wants to know if there are going to be 12 fresh webinars coming up. And yeah, absolutely, Stan. They're going to be awesome. Probably better than these even.
Yep. You guys, I don't want to, it's not going to be, this group is much smaller than the new group. So, you guys ended up being, I think, 170 people. And this next group is going to be the 250 cap. So you guys, definitely get the more hands-on approach. They're just going to get, nicer webinars and whatnot, nicer graphics and stuff. And we kind of know the problems that people are going to have. So it'll be a good time.
Mike Carl. And this is the first time I've seen you in the group, Mike. I don't know if you know, but you won a bonus raffle ticket. You got 2 raffle tickets.
Well, he's so active in the Facebook group that I had to,
Yeah, oh yeah. So he asks if one of the webinars is going to cover LLCs on the next session.
Yeah, I was actually just messaging that. Yeah, Edmund's actually bringing in his own personal import-export attorney. So there's not even going to be any of us trying to nail down an attorney, nothing like that. Nothing's going to fall through this time. It's going to be great because the guy, Edmund literally pays the guy a retainer, so he will be there.
Yeah. Kevin Donahue's like, I like the idea of starting fresh.
Yeah, definitely. And there's a lot of people, that have gotten distracted, had, family emergencies, had new jobs come up and things like that during this 12-week session. And we really wanted to make sure, if you guys come in with this again, $197 is an absolute steal for this. You get a fresh 12 weeks. You get to do the whole thing over again for 12 weeks and, everything you just got. So, this is really a good opportunity, like Kevin said, for you guys to get a fresh start at the bottom up, not have all the clutter in the Facebook group of, really high level stuff. We'll be starting at the ground up again. So it's definitely a good opportunity for people that, had those distractions come up.
So Miss Angie Hine wants to know when's the last day to sign up with the discount.
I'll leave this open for you guys until probably until Thursday or Friday. We're doing another big sales webinar on Thursday or Friday, and that'll probably fill us up to 250. So probably Thursday or Friday, I would assume, Angie. Yeah, and it's worth noting too. This time we're actually, since Edmund is partnered up with us, the times are going to be much better, I think, for Australia, the UK. We have a lot more Australian, UK, European customers this time. So Team Australia and Team UK, even if you don't join the next iteration of the Jumpstart group, Team UK and Team Australia just got a whole influx of new members. I know just last night at 5 a.m., I think Team Australia gained like 10 people. So it's really gonna be a good time. Don't feel like you're missing out if you can't do it, because the Facebook group's still gonna be a really good time. This is, if you want to continue with your importing, continue building the empire, jump in with us, get a fresh start, get continued 24 access to me and Edmund, and let's kill this thing.
Awesome. George says, can we meet you guys in person if you're in the Florida area? And yes, George, nobody's taken us up on our beer offer yet. So when you're down
definitely.
here,
we're always around.
Holla.
Yeah, anyone that's in Tampa, we're always down to hang out.
Nina just came in.
Oh, Nina. Well, good luck. Good news, Nina. You did win an award, so that's good. I'll go back real quick and show you Nina. I'll do it again just for Nina. Ready? And Audrey Prince got an award. Ready? And then it's Nina Ellis. Oh no, but I spelled her name wrong. That's horrible.
Oh no.
But yeah, Nina, we were just saying, you were you kind of dropped off in the last couple of weeks, but you were just such a good time to hang out with in the beginning. We wanted to, get you in the award ceremony. So you got two raffle tickets for the China trip. So I think you have like a 1 in 50 chance to win that free trip to China. So we'll let you know soon.
Susan says she's going to sign up just because she's going to go through killing it withdrawals.
I would too. Yeah, definitely. You guys are really going to love this new one. It's again, it's not going to be like rehashed with the same experts and the same topics and that sort of thing. It's definitely going to be, a little bit different and a little bit improved for you guys. So it'll be good.
Do you want to talk about that a little bit more?
Just about what the group's going to be about?
Yeah, just the differences, I guess.
Yeah, definitely. The main difference, guys, is Edmund is actually partnered with us now. So it's not us going out and paying Edmund. Before we had to pay Edmund $1,000 an hour to come and do the presentation for you guys. So this time he's actually partnered with us. This is his thing too now. So I'll bring it up on my screen. Wait until you see the amount of work that he's putting into his slideshows and stuff now. He is just going all out on this group for you guys because he just had so much fun coming in and doing it with us. He said, I'd really like to partner with you guys on this. So I'll bring that up right now and show it to you just to give you an idea of kind of how we're upgrading things for this next group. And again, you guys will still have access to a lot of things. You guys will still have access to the new resources and stuff. But if you ever want to ask us a question one-on-one, that's really it's going to be tough to get in touch with us after if you're not in one of the VIP programs. So look at this, guys. This is one of Edmund's. This is his most recent webinar that we did last night, and just look at this compared to his last webinars. Were literally just like it was like the equivalent of Comic Sans on a white background, right? So I mean, look at this and just how in depth it's going now. So Edmund is literally just going balls to the wall, revealing everything he has for you guys in this new one. He did everything he could in the last one, but this one he's actually, going to spend hours and hours before each presentation just thinking about what awesome things he could tell you guys. So it's going to be really fun, guys, and yeah, it's going to be a good time. So yeah, do we have any more questions?
Just the fact that Nina was in disbelief that it was $197. She's like, this can't be the right price. I just paid $197.
Oh yeah, Nina. Yeah, that was I guess she missed that. Yeah, we wanted to just do a massive discount for you guys because you guys we know that you're going to give us less emails. We know that you're going to have more higher quality questions on the webinars and in the Facebook group. So we want to get you guys in at $197. We don't want to charge you guys too much to get in on this because you guys are experts as it is. So this is for people that want to continue building that empire with good hands-on help from a ton of different experts and that sort of thing. So Tara McKee said, "I'll be sure to record the balls to the wall reference on the notes."
Yeah.
Thanks,
Hand
Tara.
slipped.
How many signed up from this group? I haven't looked yet, but I think I've seen at least 10 or 20 people so far. Yeah, just look on my phone. I see probably 10 people. So that'll be good. Yeah, and
Laura,
like I said, it's gonna be a good group too. We have so many more international people. It's really gonna be fun. Sorry, I didn't mean to cut you off, Kyle.
No, Laura Anderson from Australia wanted to know about roughly when the hours are going to be. So they're going to be better for you, but do we have anything more specific than that?
I have nothing 100% for you yet. 3 p.m., 7 p.m., that seemed decent, so we'll probably use at least one of those times. And then we're going to try to make it easier for the Australian and London crowds to come in live too. So, we'll probably be switching it up a lot. We're going to make it, with Edmund living in Thailand and Germany and God knows where he is right now, he's on all different time zones, so it'll definitely be more flexible this time around. Yeah, Depeche said, did you say the same time? It's it probably won't be the same time, but it'll probably be, say, like 3 p.m. and 11 p.m. or something like that, so we can hit the UK and Australian markets a little bit stronger. But we'll let you know for sure soon. We definitely want to make it the best for the greatest amount of people. So
Nina's already referring some people, so that'll be
awesome.
fun. We'll have Nina and her friends.
Yeah, that'll be very awesome. Yeah, Nina, we like I said, we're doing one more sales webinar on Thursday. So if your friend wants to get to that, that'd be a good time. We're literally just revealing even more information in these webinars than we did in the last one. So it'll be high value for her, even if she doesn't join. Matthew said, will we have access to the PowerPoint presentations if we don't sign up for the next course? You'll have access to everything that you've seen, including this. You'll have access to forever. If you don't join the next group, obviously you won't have access to the new recordings or the new webinars or anything like that. This 197 is really just buy-in. The weekly webinars with twice as many experts, with Edmund partnered with us now, and the 24/7 VIP email access. So.
Carter just joined. Oh,
awesome.
Man, I'm so happy about that.
Yeah, especially Carter. Anyone on that first page, I really want you guys to join. Yeah, anyone that got an award today, I really want you in. Oh, Laura Anderson. I forgot to add you in. Laura Anderson, consider yourself awarded. And George Men, both of you guys, I should have put you guys on there. So
no, George was on there.
Oh, okay, yeah, I put him on there. Okay, yeah, Laura Anderson, I don't know how I missed you. So I thought I wasn't loved. No, definitely. I think you've missed a few too in the last couple weeks, so you probably slipped my mind for a second. But you were a ton of fun in the beginning. No, you didn't miss any? Oh, my bad.
Yeah, sometimes I talk and not.
Slavanon asked for the link for the new webinar. Yeah, I'll send that to you right now. Yeah, and if anyone wants to send us, send any friends to the new webinar for the new people, that would be awesome. That would I would love you forever. I'll definitely buy you a beer then.
And it's just like having a friend doing it with you has got to be pretty freaking awesome.
Yeah, definitely. And I'm sure you have a lot of friends that see that this is actually a legitimate coaching program and everything. There's probably a lot of people that say, "Whoa, it's not a scam." Awesome, you want in. So
Mike Carl's gonna join.
Yeah, I saw that. Awesome, Mike Carl. That'd be great too. Mike Carl, another award winner. So, oh, Hao Yang, you should have been in too. You got an award too. I'm sorry, I forgot you too. You're in. Cool. Yeah. So yeah, if you guys have any more questions, we're starting to wrap down here. So we'll probably do another 5 to 8 minutes, and then cut down. Oh, hey, Kate. Kate Colgan's on. Good to see you.
Yo, Kate.
I missed you at Startup Weekend last weekend, Kate. It was sad not to see you there. Depeche said he might join after checking his schedule. So awesome. Yeah, like I said, guys, you guys will be good to join this at least until Thursday night, U.S. time, Eastern time. So Laura Anderson said, I'm signing up. Is it PayPal? We have PayPal and credit card, whatever works best for you, Laura.
Stan says he has no friends. But you're here, Stan, so you have plenty of friends.
Definitely. Yeah, Stan, people were freaking out when you won the award. What are you talking about?
False modesty.
Sam Palmer said still on Tuesdays. Yeah, so it's either going to be on Tuesday nights or Thursday nights, and the times will be a little bit more flexible this time. So if you're based in the U.S., we're going to make it work for you. If you're not based in the U.S., it's going to work much better for you this time.
Susan Legowski says, put it on your business account and write off on taxes. There you go.
There you go. That is what I would do. Education.
Oh, yeah. Did you say James is joining?
James Allegria. He got an award, right? James, you got an award? He better have gotten an award. But yeah, James, happy to have you back in the group. You didn't get an award? Oh, my God. I'm horrible. All right, James, yeah, you definitely got an award, too, so we'll make sure you get a raffle ticket, too, because you've been pretty active, too. Kate said, what can I do to help promote the next webinar? That's an awesome question. I love that question. Yeah. I just sent you the link for our landing page. And yeah, it's going to be a good time. You guys know how we do. We're not, hard sells or anything. So we're literally, going 90 minutes just revealing the whole method again and, on, a top-level view. And then saying, if you want to do this the right way, jump in the group with, all these awesome people right here.
Greg Jones says he's thinking of joining. What do we have to do, Greg, to get you to stay around?
Oh, Greg, definitely. Greg, we need you. We'll do anything for you, Greg. Greg's awesome. I don't know. I think even if Greg didn't get in the next group, I think he'd still have a lot of fun with us in the Facebook group. Though he's just such a hoot in the Facebook group.
Hoot and a half, Greg. Yeah, Stan needs the link too.
Yeah, I sent that over.
James Allegria is real pissed that we get his name wrong.
Yeah.
We're sorry, James.
I don't know what the international stereotype of Americans are, but I'm pretty sure it's very American to pronounce like 50% of names wrong, and I definitely have that. So sorry guys. Yeah, Greg Jones said definitely a Facebook group's great. Yeah, we'd love to see you back and on the webinars too, Greg. Your questions are always great. You're really Greg's really become a really high level importer since joining us, so it's great to see. We'd love to have you back. Yeah, Tara McKee just said Greg definitely has to be there. Yeah, definitely. Oh yeah, awesome. Yeah, Kevin.
Yeah, thanks so much for.
Oh, yeah.
Thanks for promoting it, you guys. That's really cool.
Yeah, that's definitely a huge help for us.
Yeah, Stan wanted to remind everybody of the Skype group as well.
Laura said, does it sound right that it's $3.49 Australian? No, that doesn't sound right, unless the Australian dollar is really killing the US dollar right now. But it should be $1.97 US. So if you have a problem with that, Laura, definitely email us and we'll get you the correct form. So yeah, honestly, guys, it looks like probably 25, 30 people from this group have joined into the new group. So that's great to see. We're really gonna have a good time. I promise you guys, are gonna have even more fun this time around than last time. It's really gonna be great. Tara said, "I pay more for gas in my truck." Man,
yeah,
gas prices, huh?
That's not hard to do.
No. James said, so to get this right, we sign on in one of those last two websites marked on the last slide. Yeah, you just do the payment through that, and you guys already have your accounts and everything. I think you guys will get an email with new account information and everything, but once you guys do that payment, you guys are good to go. We're going to put you in the system as continuing on to the next group, and you guys have full access to everything that happens in that.
Susan Legowski just emailed her entire list with the link.
Oh, that's awesome, Susan. You're awesome. Yeah, I'll definitely give you a shout out on Thursday's webinar. I'm gonna give you a shout out just for that.
That's so awesome.
Yeah, so I guess 197 USD is 210 Australian dollar. So Laura, if you are seeing a higher price than 210 Australian, definitely just throw me an email and we'll get you all set up.
Yeah, so Danny said it's 210 Australian dollar for 197.
Huh? Yeah, Laura said it's not working. But yeah, Laura, let me try sending you some links directly and see. This might not work, but we'll get this figured out. No problem. All right, guys. So let's do another 2 minutes here. Is anyone else having that problem with the Australian currency showing too much?
No, Stan just said three payments of $67 is pretty cheap.
Yeah,
Indeed,
definitely.
Stan.
This is guys, like we we really wanted to discount this to a huge extent for you guys. I was gonna make it like $297, but the thing is, you guys are just so awesome, and I know that you guys aren't gonna. It's not like you guys are gonna be flooding the email box like the new students. So I just really wanted to get you guys in there for a good price. So yeah, 3 payments of 67. I think we only even have 4 payments of 57. So it's just an absolute steal this time around for you guys.
Yeah, like Tara said, that's less than gas.
Yeah. Yeah, Kevin Donahue just said, I just put $162 of gas in my truck. I get better value with this. Yeah, definitely.
Jeez.
I don't, I guess I'm lucky that I don't have a truck, but.
It's not fun. I drive a 150 or 1500 Ram, and that burns. Oh my gosh, we're getting all sorts. So 197 is 216.70 Canadian dollars. By the way, do we only have? Carter said it was him and then 3 others in the Team Canada. I feel like that we had many more. But maybe they're just less
I know we
active.
have at least more than 4, but some of them. The thing is, some people don't talk in the Facebook group or anything. So, but Carter, you'll have a lot more fun with this next group. We're also adding a lot of people from Canada. So, oh yeah, Tara McKee's from Canada. So there you go, two first place winners over there.
Yeah. Oh yeah, Liam. Liam just hasn't been around. One of the young.
Yeah, I don't know if he's on. We'll definitely give him a raffle ticket too. He's been a good time. All right, guys. So we're gonna start wrapping it up here. You guys definitely feel free to email and everything. You guys will have access to that VIP email box at least until the end of this week. We're gonna be answering you guys. So feel free to, if you do have questions or anything, definitely hit that. And for anyone that joined the group, congrats. And I think you guys are gonna be very blown away by how much improved this new course is. And you guys are just going to have a great time with this new coaching program. So really look forward to working with you guys again. And again, guys, you guys know how we work now, so I won't go too far into it. But definitely email us if you have any problems, vip@startbros.com. We'll get to you right away. And I'll talk to you guys again in the Facebook group. And by the way, we'll have this recording and last week's recording up in the next couple hours here. So guys, it's been great hanging out with all you guys, and I look forward to, continuing our relationship in Facebook and things like that, or for the new people in the next group. So really, really great working with you guys. And I don't know, Kyle, do you want to give a heartfelt goodbye?
Goodbye, you guys. No, it's been super inspiring working with you, and I am so grateful that as many of you are coming into the next program as are. So it's awesome we get to continue this and keep building up those empires, because I know they're just starting now, but I feel like the hardest part is behind us in a lot of ways, the toughest, smallest parts. So things are going to get big fast, I think, in the next 3 months. I'm pumped.
Yeah, definitely. I'm very pumped too. So, guys, yeah, it's just going to be amazing. Really look forward to working with you guys again. And for those of you who didn't jump back in, it's just been really an honor working with you guys. So, thanks so much for making this group what it has been, guys. And I hope it is as awesome, if not more awesome, the next time around. So, guys, my final goodbye. I'll see you guys later.
Lots of love.